So friends, now I am with a new topic, input tax credit. The concept of credit was there in central excise also, in service tax also. But the credit was limited only to the people who were also liable to pay excise or service tax. Now in GST, the concept has become a little broader. Now we use the term supplier. Now this supplier may be a manufacturer, may be a service provider, may be a trader also. So now in this scenario, even a trader is also eligible to avail credit of input supplies, right? So this way, this is one of the important aspect of GST. So there is a continuous chain of credit right from the beginning till the end. So till the goods reach the ultimate consumer, every supplier up to the last stage, that is before the ultimate consumer, is eligible to avail credit, but subject to certain conditions. So the question of basic condition is that a person is eligible to avail credit only if he is liable to pay GST. So the question of GST will arise only when he is registered. But after registration also, the person may be under composition scheme. So during composition scheme, he is liable to pay but not entitled to avail input credit. That is one exception. Another exception is zero rated supplies, where the no output tax liability exists but the credit is available. So subject to certain exceptions, you can say broadly, when a supplier is liable to pay GST, he is entitled to avail credit for all input taxes that he has paid, okay, or the tax that has been charged, whether paid or not paid, that is another question. Okay, now in this chapter, what we are going to cover up? In this chapter, we are referring CGST Act and Rules, right? Now, which are the provisions which we are going to talk about? So here I am writing sections. And then which are the rules relevant for that, that also will write here. So section number 16, and the title for this is eligibility and conditions for availing credit. Eligibility and conditions for input tax credit. And while reading section 16, we will have to refer rule number 36 and 37. Rule 36 and 37. These two rules also we will refer when we talk about section 16. Then comes section 17, that talks about apportionment of credit and blocked credit. This is apportionment of credit and blocked credit. So the question of apportionment comes only when we are using certain goods for business and non-business purpose, and in business also taxable and non-taxable purpose, and in business again, that is including the zero rated supplies. So the credit is available only in relation to taxable supplies as well as exempt, but including zero rated. So you can say the credit is available for taxable supplies as well as zero rated supplies. So where the tax liability does not exist, the question of GST credit does not arise. So in this we will refer rule number 38, rule number 42 and rule number 43. So these are the rules which we are going to refer along with section 17. Then comes section 18, and that talks about availment of credit in special circumstances. So this I am writing ITC in special circumstances. So various situations are covered herein. So goods are exempt and then those become taxable, or taxable goods become exempt, or a person under the composition scheme comes out of the scheme, or a person goes into the composition scheme, or a person becomes eligible or liable to registration. So all those situations are covered in section 18, and the title given is input tax credit in special circumstances. And for this we will have to refer rule number 40, 41 and 44. Rule 40, 41 and 44. These are the rules which we will have to refer. Then comes section 19, and that talks about taking input tax credit on capital goods and inputs sent for job work. So I'll just put a title, job work and input tax credit, and in bracket I'll write for inputs and capital goods. Inputs and capital goods. And along with this we'll talk about rule number 45. Then we have section 20 as well as 21, and that is in relation to input service distributor. Section 20 and 21, this is relating to input service distributor, and for this we will have to refer rule number 39. This is rule number 39. So you can say that from section 16 to 21 in a sequence, and then rule number 36 to 45, these are also in sequence, but applicability is not in sequence. In addition to that, we will also have to refer section 41, then section 42 and 43. These are actually pertaining to returns, that how much credit will be available and when the credit is required to be reversed and how that is to be treated. All that we are going to talk about in section 40, 41, 42 and 43. So this is one chart, or you can say a small note, which is going to help you to understand the concept of input tax credit. Right. So first you have to remember the sections and the applicable rule numbers. That will make entire chapter easy for you. Now before going into the sections, we will have to understand some definitions which are relevant for the purpose of this chapter only. Right. And I'm not going to talk about the common definitions which we have discussed earlier. Say for example, what is the meaning of goods, what is the meaning of services, what is the meaning of person, what is the meaning of recipient, what is the place of business. Those things I'm not going to discuss, because those definitions we have already talked about in earlier chapters. So the certain definitions which are exclusively relevant for this chapter, and those we have not covered earlier, those I'm going to take up now. The first important definition comes capital goods. The term capital goods, this is defined under section 2 subsection 19. Right? Now what is generally referred as capital goods, and when the credit is available, that makes a difference. So to be considered as a capital good, then first thing is goods the value of which is capitalized. In books of account. First thing is the value of the goods which is capitalized. Number two, these are other than inputs, and then either used or intended to be used in the course or furtherance of business. So what is the meaning of the term capital goods? So first we said these are the goods for which the value is capitalized in the books of account, and number two, those are other than inputs and used or intended to be used either in the course or furtherance of business. But under section 17 there are certain goods for which the credit is not available. So it does not mean that the credit, whatever we capitalize, the credit will be available. This is subject to those provisions which are under section 17, and in that case the very first example is motor vehicles. Whether credit will be available in relation to motor vehicles or not, so that depends upon for what purpose the capital goods are or rather motor vehicles are being used or intended to be used. Then the credit is available or not available. So even if we are capitalizing the cost of motor vehicle in the books of account and those are used in or furtherance of the business, still the credit may not be available if the conditions given in the section 17 are not fulfilled. Okay, so that is what is the meaning of capital goods. Now you may have a small doubt that if we capitalize in the books of account, then there will be depreciation. So whether we will have depreciation or we will have input tax credit. So friends, when we buy some capital goods, there is a price. Price is having two components. One is the value and another is GST, right? So value will be capitalized and the amount of GST that will be available by way of credit. So now you have to underline this word, the value. We are not capitalizing the price. If you capitalize the price, certainly no input tax credit will be available on capital goods. So here the value for which is capitalized, and these goods are used or intended to be used either in the course or furtherance of the business, then input tax credit is available but subject to fulfillment of other conditions. And one of the conditions, as I said, in relation to motor vehicles, then there are similar other conditions as well. So when I come to section 7, elaborate what are the conditions and what are the things on which credit is not available, right? So this is the meaning of the term capital goods. Now next we move to exempted supplies, and that is referred under section 2 subsection 47. The term is exempt supplies, and this is section 2 subsection 47. Right? Now exempt supplies, this is number one, nil rate supplies. Number two, non-taxable supplies. Number three, supplies which are exempt under section 11 of this act or section 6 of IGST Act. So the question of exemptions we had already discussed in detail in a separate chapter, right? So exempt supplies for the purpose of GST are those supplies which are subject to nil rate, and these are in general you can say export supplies. Non-taxable supplies are those on which GST is not applicable, and then we have supplies which are exempt. So primarily those are taxable, but exemption has been given under section 11 of this act or under section 6 of the IGST Act. So those are referred as exempt supplies. The next comes, what is the meaning of input? And that term is defined under section 2 subsection 59. Input, section 2 subsection 59, right? So this says all the goods other than capital goods, all goods other than capital goods. So in the definition of capital goods, we had said all goods other than inputs. So the basic difference is where the value is capitalized and where the value is not capitalized. That is the main point of difference. So the value of the input is never going to be capitalized in the books of account of the supplier. Okay, but the value of capital goods is bound to be capitalized. So these are all goods other than capital goods, and these are either used or intended to be used in the course or furtherance of business. Okay, so this is the term input. So all goods other than capital goods which are not capitalized in the books of account, and if those are either used or intended to be used for the furtherance of the business or in the course of business, then those are referred as inputs. Then we have input services, which comes under section 2 subsection 60. Input services, this is section 2 subsection 60. Idea is very simple. These are all services received by the supplier, and those are either used or intended to be used in the course or furtherance of the business, right? So this is all services received by supplier. And number 2, used or intended to be used in the course or furtherance of business. Okay, so main 3 definitions, which are capital goods, input and input services, those are very, very important because those are the terms we are going to use throughout the chapter. So those 3 are already defined now. Now we move to the next definition, which is input service distributor, and that is under section 2 subsection 61. So we have input service distributor. This is section 2 subsection 61. Input service distributor. So input service distributor, it is an office. It is an office of supplier, and this supplier may be of goods or services. It receives invoices or any other document issued under section 31, or maybe a debit note, right? So debit note is not under section 31. So it receives either invoice under section 31 or any other document in relation to input services. So first of all, it is an office, and the specialty of the office is that it is receiving invoices in connection with the input service. Now, where the input service is received, that is not important. So maybe at one location, maybe at another location, maybe at third location, wherever services are received, irrespective of that, but the invoice is being received in the office. Now, if this office is registered as an input service distributor, it can avail credit for the amount of the tax which is charged on input services. So if office is registered, as input service distributor, it can avail input tax credit for tax charged on input services, right? Now the credit is available in the office, but the liability is accruing at some other place where from the supplies are being made. It is not necessary that supply is also being made from the same office where the credit is being availed, because here I said the services may be received anywhere else, right? Invoice is received in the office is registered, office can avail credit for the tax which is charged on all those input services. But what to do with the credit? So this credit is allowed to be distributed to other place of business which is registered under the same permanent account number. So this credit can be distributed to persons under same permanent account number. So this is called input service distributor. I hope this is clear, right? And by chance if you have not taken a note, you can always press a pause button before proceeding further. The next important definition comes input tax. That is under section 2 subsection 63. This is input tax, and this is section 2 subsection 63. So what is called input tax? This is CGST, IGST, UGST or SGST charged on inward supplies, or rather input supplies. So whatever supplies are procured, whatever supplies are received, and those supplies may be in relation to goods or may be in relation to services. So this is, the term is tax charged. So whether paid or not as of today, that is another question that we will discuss later on, but this is the amount of tax charged, and the tax may be CGST, IGST, UGST, etc., for which the credit can be taken, right? That further says doesn't include tax charged under composition scheme. So friends, composition scheme, some of that part we have already discussed before. So composition scheme is a scheme where the registered person pays tax and on the basis of the turnover, not exactly which is applicable for every supply. So he has to pay tax on the turnover, but he cannot recover that amount of tax by showing it separately in the invoice from the customer. So this is the amount which is paid under the composition scheme, for which credit will not be available. So there is a tax paid, but the amount of tax paid under the composition scheme cannot be shown by the supplier in the invoice separately. So the credit of that will not be available, right? So here we have said amount of CGST, IGST, etc., which is charged on inputs on inward supply, but does not include any amount of the tax which is charged under the composition scheme. It means no credit will be available for the tax charged under the composition scheme, right? So this word, you can correct that this is actually inward supplies. Right? So what are the inward supplies? Whatever is procured. So those may be goods, so those may be services. Now we have another important definition that says non-resident taxable person, and that is covered under section 2 subsection 77. Non-resident taxable person. This is section 2 subsection 77. So who is the non-resident taxable person? This is person not having fixed place of business or residence in India. This is the first thing. That's why the non-resident. So it does not have any fixed place of business or residence in India, and occasionally engaged in making supplies, and these supplies are certainly made to the customer in India, right? So he is the person who does not have a fixed place of business or place of residence in India, but occasionally gets engaged in supply of the goods or services in India. Then we have another one is output tax. So that is section 2 subsection 82. So like we have input tax, now we have output tax. This is section 2 subsection 82. And this is the amount of GST chargeable on supply of goods or services, but this does not include tax payable under the reverse charge. So reverse charge we have already understood in detail earlier, when the reverse charge is applicable for the goods and when the reverse charge is applicable in relation to services. So when a recipient is liable to pay tax for the inward supplies, that is called RCM. So that is payable by the recipient, but that will not be considered as his output tax. Actually, that is the amount of tax somebody else has to pay. But because of statutory provisions, he becomes liable to pay. So when we say output tax, so this is the tax which is payable on his outward supply. It does not include the amount of the tax which is payable by him on his inward supplies. And then what is outward supplies? The supplies which are made available to the client or customer, right? So friend, these are some important definitions for the purpose of understanding this chapter, right? Before we actually get into the provisions of section 16 onwards, I wish you to read all the definitions once again, and do not forget to remember the list of the sections and rules I have given you in the beginning. So till the next video, have a good time.